Hello, Warriors. Dale Pinkert here at TradeGATEHub.com, sponsored by TradeView Markets. Let's have a great week. So I left you on Monday, had a few interviews, talked to Mike Tuesday and two other interviews after that. And I left you with really saying I really like silver at 1850. Okay, so in fact, it was, it's hard to, okay. So I believe this was a day, you know, we rallied up to 1900, 1850, and it was a nice day trade and bottomed at 1800. But 1850 is looking pretty good. Silver's definitely proving itself to me, and looks like we should make a move up towards 22. The caveat being whether or not the dollar has another move to the upside. But as a viewer, you know I've been talking about how well silver has been holding up with the dollar exploding to the upside with the risk off in equities, and that any relief and pressure from either the dollar momentum to the upside declining or some type of move up where people aren't afraid of risk and yields possibly peaking, which may have happened last week in the frenzy up at 4%. I'm not saying we can't have rallies back to, you know, maybe 395, but it's looking pretty heavy here. And I see no reason why we can't at least pull back to 350, which was the prior high, right? That was back here. So to test a prior high is, you know, technically par for the course. Although I know people that are saying that we could pull all the way back down towards this 260 level. And with that happening, on Wednesday, when we had that major bank problem in the BOE and the gilt market, if you were in our main chat, I had buys at 95.50 in euro. So it rallied above 98, so it was good for 250. The point being, can the dollar pull back one more time and wash out? A lot of people would say, technicians would say that is possible because it's only a three wave. Similar here in the pound, that you need to close over a fourth wave of lesser degree, which would be 114. And if you notice this right here, I haven't seen a throwover like this in years. This is definitely crisis stuff that the BOE did to save the gilt market. So I've been talking about the last week or so that it's going to take not BOJ on its own, not BOE on its own, not the Swiss National Bank doing things, but it's going to take a concerted effort, a G7, G10 effort of intervening in the currency markets. Conventional wisdom would say that they would wait until we were retesting or taking out next week's lows. I don't think they have to wait for crisis to develop to step in. There's G7 or 10 meetings coming up in mid-October. A lot of people are saying they might use that for a platform. I don't think they announce it. I don't think the market's looking for it. There are more and more participants beginning to talk about it, but we'll see. So the important thing to me is, what kind of pullback do we get? Do we get just a higher low? The difference is going to be, do we get a higher low or a lower low? And either way, I'm a buyer. Same in perhaps we could rally, take out this 95.5 level and trade 94. The RSI says it's possible here on the daily. Also shorter term, you had a little bit of divergence here, but it's a pretty negative look. And now if we pull back to new lows and watch the new lows and we get intervention, it would happen with a more positive RSI structure. Last night I put out a sell in USD CAD and it was already 50 lower. It was at the 38 and a half level on this candle. Starting to look like it might dig in its heels and make another run. Same with Aussie. So now we have to watch what happens on the next dollar rally. Maybe it's going to happen from this level right here. And are we going to get a failing rally in the dollar, or are we going to make one more new high? To me, that's a coin toss. But what isn't a coin toss is that central banks are now involved. So I would welcome a new high in the dollar for shorting positions. Again, this worked. What I'm also seeing where there might be need for more intervention is the yen. And you guys know I tried it at 45. The yen never really gave us much when the dollar was weakening. It almost looks like it wants to try. The last time the BOJ was in was up here at 45.90. So we'll see if we could push it above here if the BOJ comes in, or perhaps other G7 countries come in and the Fed gives the BOJ a wink and a nod to go ahead, and they'll back them on what they're doing. But really, the star of the show is silver. Really feel like, you know, uh, I don't like to chase anything, but, I was talking about the long side of silver here and, tested my faith here, but, I knew where I was wrong and where I told people to have their stops. And now we're getting a pretty good wave to the upside. And really, what a great selection, if I must say so myself, silver over gold from this 95 level that I talked about in late September. That's a huge move in the gold silver ratio and a huge candle here. 83 is a pretty big area too, because 83 is where all these moving averages intersect. We take that out at 83, you're talking down in the 70s. And as I've been saying earlier in my trading career, a mean for the gold silver ratio was about 40. So if I extrapolate 25, say $2,400 gold at a 40, at a 40 gold silver ratio, that would equate to over $60 silver. So I think we're in for a couple of good years in silver, a couple of good years in gold, and part of that equation is going to end up being a weaker dollar eventually. So right now, I'm just neutral. I want to see what happens here. Of course, the euro was weaker, and actually Aussie was even weaker than the euro until today, trying to show some upside. I really like the commodity currencies, so I'd be looking for the commodity currencies to actually do quite well. Although I do think that the dollar index being heavily weighted in the euro, we'll see if we get one more flush down here and what central banks do. With that, little of the relief is coming into the S&P market. We have this 36 level. I would wait for daily closes above 36 to try it. I see better chart patterns elsewhere. For example, copper has a much better chart pattern, held 325. Copper looks good. So things that you drop and fall on your and hurt when they hit you on the toe is what looks best to me right now. And I'm sure I could show you some gold shares, something that Mike and I talked about last week. Let's see what Newmont's doing. No trip to Hollywood, but the 3 drive, we did get a little pop out of it so far. In fact, it's some of the smaller issues like this, right back at resistance, and the silver issues, which are this one in particular, Endeavor, acting pretty good back at resistance. So a lot of things back at resistance, but I believe lows are in, and I'd welcome pullbacks to add to positions in the miners, even getting a nice bounce in TLT. It's no trip to Hollywood, but the highest conviction longs of being the precious metals have worked out pretty good. And if you didn't catch the bounce in euro last week, I would just stand aside and see what happens over the next few days. If you want to play for one more low, you have very tight stops, over say 98.60. 100 pip stop, looking for new lows on the move. So just an update of what we have going on here. Gold still hasn't negated the breakdown. It has to get over the 1680 level. And let's see what happens to the S&Ps. But I think the biggest story is the dollar, and will continue to be it. It's a tail wagging the dog. And I think that central banks are getting set up to make a move much easier than doing something about rates. In fact, a weaker dollar would give the Fed cover, because commodity prices with a weaker dollar will not go down as fast and could rally just in nominal terms, which would make inflation more sticky, which gives the Fed cover to continue to raise rates in an ever weakening economy. So that's the way I see it. Tune in to Mike today later in about an hour and 20 minutes for his picks on this bounce. He had a plan about this 35.85 level and how he was going to trade it if it held, and what issues he favors. But the big story right now is rates, which look to have peaked, and the jury is still out in the dollar. But I believe the cavalry is ready to intervene into these markets. And I think the first sign would be the yen challenging where it spent 1% of reserves up above 146. If I get that move up towards 46.80, taking this high out by maybe 100 pips, looking to short it. And that's a wrap. Remember, come in and join us. And, perhaps you would have been more convinced about silver. It wasn't an easy ride. I took heat, I was long here, thought, it was going to just be a shallow correction to 1850, and took some heat, but never took out the low, and nice continuation move there in silver. So good hunting, everyone. Remember, don't just count your silver coins or your shares or your currencies. Count your blessings. I'll see you tomorrow. Mike and I doing our macro talk Tuesday, and good trading. See you in TradeGATEHub, and check out TradeView Markets. Open a demo, check out their spreads, and compare the service you get on. They have MT4, MT5 compared to your broker. See everyone tomorrow with Mike.